Hello, 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 and welcome to the Rich Dad Radio / podcast show. That's my best Robert Kiyosaki impersonation. Anyway, it starts the show that way. So I thought I would make sure you all know you are on the right show, but it's not with Robert Kiyosaki today. Instead, we're going to bring on Andy Tanner, who I'll tell you about in a minute. Andy, you can wave if you want, but don't talk yet.
Oh.
Andy and I came up with 3 goals for our show today, so I thought we'd share those. 1, we want to tell you something that's going on in the world right now that we think you should know about. You probably have an inkling what's going on, but we want to get Andy's insights. 2, we want to let you know what we think, how what's going on is going to affect you, the viewer, listener, personally. And 3, we want to give you some ideas, maybe some action ideas to consider doing for your own personal life, your own well-being. So as I said, our guest today is Andy Tanner, who is a wealth expert, a Rich Dad wealth expert on the Rich Dad newsletter. There'll probably be a link in the show notes. I don't really know how those things work, but I want to read a quote to you about Andy Tanner, who's written, no, it's a good quote. You don't got to sweat this. This is actually a quote from Robert Kiyosaki. Oh, I should also mention Andy Tanner has a bestseller, Cash Flow, Stock Market Cash Flow. Wait, did I get that right?
That's right. Stock market cash flow.
Market cash flow. Highly recommended. And also, if you want to dig a little deeper, before that, he wrote a book called 401 Chaos. And Andy, I should have talked to you about this, but in the links, I think there's a way to get your new book before it goes to print or something like that. A free.
We'll figure something out.
All right, we'll figure something out. So anyways, check the show notes to get free stuff later. But let me read this quote. Smart investors invest based upon both fundamental and technical input. This is what Andy is so great at. Andy draws on both fundamental and technical insights before making his investing decisions. I think that's important that you have both skill sets there, Andy. The wisdom Andy possesses is priceless, which I'll agree with. I know because Andy has been my stock guy for over 15 years. I call Andy for his guidance before I invest my money in stocks. And not only is Andy a great investor, he is a great teacher, which means I learn a lot every time, and I always seek Andy's guidance. The last thing I want to say, what makes Andy so special, and this is incredibly important, is his ability to make profit no matter what is going on in the market, which, Andy, I got to say, that last part.
That's nice. I should have you guys speak at my funeral. You say nice things. So thank you.
Well, anyways, I thought that was really important, especially because the market is so uncertain right now. Everybody knows there's the bank crisis going on. Inflation's sky high. But what we want to talk about, the uncertainty, is really about what's going on with the debt ceiling.
Mm-hmm.
I'm sure just about everybody listening here has heard that we're at near the top of the debt ceiling, and if Congress doesn't raise the debt ceiling, oh my God, the world, explosions, volcanoes, nuclear bombs, I don't know, space aliens, dinosaurs, the end of the world will come, and all our children will be eaten, and we will all die. But it's possible there's other opinions and points of view that we should explore. And Andy, in addition to all those great things Robert just wrote about him, I think that was from one of your forwards in your book, but I'm not sure.
Well, I will tell you, Greg, that you talk about fundamentals and technicals. That's a little bit about how I would see this even today in the debt ceiling.
Okay. Hey, first, will you just kind of explain the debt ceiling?
Yeah.
Congress is rolling it, and the Federal Reserve's rolling it, and really let's get some foundational information before we dig into really how our listener viewers can profit or at least be protected from what's going on around.
Well, investors would do well to learn at least a couple of policies at the government level. The first is called fiscal policy, and that's really about Congress. They have 2 things. They decide taxes and spending, how much money should come in and from whom and in how much. And then they decide where those funds are going to be reallocated, right, and distributed. The other one is monetary policy, which is the Federal Reserve, and that's a different discussion than today. Today is about that fiscal policy. And the government brings in money primarily from taxes. They say, hey, here's how we're going to get cash. And if there's a shortfall, if they spend more than they bring in through taxes, they're gonna issue bonds and go into debt. And this is history. I mean,
hold on. This is just an example of who Andy Tanner is. He said, if the government spends more than they took in. Really? That's where we're going to go with this?
when the government,
when?
the government spends.
Okay, thank you.
Back in the day, the government, way back, 1800s, very early 1900s, if the government wanted to fund a project or a war, they could issue bonds, such as a war bond. And the way it was is if they wanted to borrow money, they had to list the project, much like a municipal bond would say, hey, we're going to build a school, let's issue bonds to build a school. Or we're going to build a park, let's issue bonds to borrow money to build a park. And in 1917, they changed the law to where they said, you know what, we're going to give them more latitude where they can issue treasury bonds as needed. And so this has happened. We've come to this point where there's this limit of how much they're able to issue. And that's really what the debt ceiling is they say, look, there's a limit on the amount of debt that we can borrow. There's a limit on the amount we have. And it's
How's that limit established?
Arbitrary number. What?
It's arbitrary.
Yeah, I mean, they set it and, they argue over it. And then they said, okay, this is what we think we need. And it's been raised, I would imagine, well over 100 times this has happened. It happened in the 20th century 90 times. It happens all the time. The concern is a little different. We'll get to the concerns of it.
No, but that does lead to the question, like, why are we even talking about this? Sounds like it happens every other Wednesday.
Yeah, it really happens frequently. As a matter of fact, in 1995, this is how old I am. I was just married a couple of years. In 1995, they actually did not come to a consensus. And it was Bill Clinton fighting with Newt Gingrich. Okay. And Bill Clinton was having a rough time. He came in and won pretty big and beat Bush. And, he really made a lot of aggressive moves that really made the country angry. And so Newt Gingrich came in the midterms and they just had a landslide. I mean, Clinton really was like, wow, I mean, I must have gone too far with my stuff. And Newt Gingrich had his contract with America. I don't know if you remember that stuff, but
I do.
But Newt had, he had the side of the people as Speaker of the House in his corner. So he and Clinton, he did something that had not been done before. He said, we're not going to fund it. So the government shut down. And the way it worked was a bunch of employees were what you call furloughed. So they said, you're not fired, but you're not coming into work till we get this worked out. Social Security checks went out, but even there was parts of the Department of Defense that didn't go to work. There were a lot of government agencies required critical, you got to have your air traffic controllers and, government employees that are in charge of that type of stuff. But you can look it up on Wikipedia and you can see which government, departments were furloughed. And it was only a few days until they got it up and running again. Then they kind of got a temporary fix at the end of the year. And then the new year, they had a few days where it shut down again. So in 1995, 1996, it took them a little while to figure this out. So the government actually did shut down.
So I think it was Yellen.
Yeah.
Yellen made some announcement like if this doesn't get raised by tomorrow, whatever, the whole world's going to crash. The whole world's going to lose faith in the US dollar. And I think she used the word disastrous.
Yeah, I don't think it was a disaster. It certainly isn't beneficial when the government doesn't work or is shut down. And if you look at it statistically, that isolated instance in 1995 in the midst of probably close to 100 times they've had to have this debate. And it's an opportunity really for political saber rattling and posturing. Here we have this problem that is inevitable to come. We're going to spend more than we've taken in taxes. We're going to have to raise the debt ceiling. And it happens every time. And it's an opportunity for Republicans and Democrats to point the finger at each other and fight. And you're wrong and we're right and blah, 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 blah. Is there a chance it gets shut down again? Every day that goes by that they don't get a deal, certainly the chances of a government shutdown. In 2021, I believe it was 2021, if not, it was close to that, they did a partial funding. They said, look, we're not going to get this done by the deadline. So we're going to allow, a little emergency, not the whole shebang, but will allow for some temporary relief where you can issue a little bit more debt to get things done and keep this thing open for another month while we figure it out.
Okay, so
there's
that was
been
only
various.
that was only 2 years ago. So not like 1800s.
No, this happens all the time, and this.
Okay.
So here's the bigger thing, though, is how does this affect you and I? And this is
the Joe Schmo, the Cindy Lou who's watching, listening, do they need to worry? Do they even, like, when this is on the news, should they just turn it off, or do they need to be paying attention to this?
I mean, if you enjoy the news, I don't listen to it much.
I was gonna say, does anybody enjoy the news?
Yeah. What I like about these things is you mentioned fundamentals and technicals.
Yeah.
And fundamentals are really about performance. If you and I went to the doctor and had a physical, a checkup, they check for vital signs, blood pressure, BMI, and they'd say, Greg's in a lot better condition than you are.
I don't think that's true.
The life insurance people would be more attracted to you than me, for sure. But there's just certain fundamental things that make a body run right. Well, a business is the same. There's just certain fundamental things that make a business run right. So when I look at, I don't look at stocks in the aggregate as a diversifier. I like the way Warren Buffett approaches it. He says, hey, is the fundamentals of this business strong? Do they have a competitive advantage that he calls a moat, like around the castle? Is they protected? Like, Coca-Cola, it's a pretty unique formula, right? They got a great brand. It's just hard for the Royal Crown Cola to overtake those guys, right?
Fair enough. Yep.
And so if you look at investments, this actually creates opportunity. As the saber rattling in government, goes along, it can certainly drive down the price of stocks. Uncertainty is something the market hates, so people get out until they figure out what's going on.
All right, we'll explain what's in this for them when we get back.
There you go.
Robert already warned us, 2023 is going to be the year of lost wealth. After all, Goldman Sachs predicts you'll see zero returns from stocks for the rest of 2023. And investors like you have already made a record number of emergency hardship withdrawals from their 401ks. Now a stunning survey reveals that over half the Americans making six figures are living paycheck to paycheck, combined with tens of thousands of layoffs in just the last few weeks. It becomes clear that a financial storm is brewing and nobody is safe. But if you think brilliant investors like Robert are letting their money waste away in a 60-40 portfolio, think again. For years, Robert and other experts have been investing millions into low correlation assets that can still climb when the stock market flatlines. And according to a recent Citibank report, of the major asset classes, the lowest correlation belongs to art. That's right. Contemporary art prices have outpaced the S&P 500's total return over the last 26 years by 131%. Now you can enter this market without needing millions, thanks to Masterworks, our longtime partner. Their platform lets you invest in shares of paintings by icons like Picasso and Banksy. Every single one of Masterworks' 12 exits to date have delivered positive returns to their investors, with their last two sales returning 10 and 35% net. In fact, just since our last episode, Masterworks sold another offering, handing back a 15.4% net profit after just 36 days. No wonder over 680,000 users have invested more than $500 million on Masterworks. Offerings have sold out in minutes, but Rich Dad listeners can skip the waitlist by going to masterworks.art/richdad. That's masterworks.art/richdad. See important disclosures at masterworks.com/CD. If you're concerned about high inflation, looming recession, a stock market correction, or out of control spending in Washington, this is an important message to hear. Because the fact is, during every major crisis in U.S. history, many of those who failed to prepare watched their savings, investments, or retirement funds go down, while many with the foresight to own gold helped preserve their purchasing power. Gold even made some folks richer. Now we're facing several major crises at once, and experts say we may soon face even more economic trouble. So please don't wait. wait. Learn the simple way you can diversify with gold and put yourself on the road to financial peace of mind, even in uncertain times. The new free 2023 Gold Guide from our friends at Gold Alliance can show you how. Just visit www.freegoldguide.com/Robert or call 1-800-473-4585. Republican Governor and conservative commentator Mike Huckabee says Gold Alliance is the only gold provider he recommends to his friends and family. Find out why and visit freegoldguide.com/Robert or call now at 1-800-473-4585.
Feeling powerless over current events and your financial future? Financial freedom is your freedom. Robert Kiyosaki is the best-selling author of Rich Dad, Poor Dad. Over 40 million people have taken Robert's advice. Now it's your turn. Attend Robert's free virtual wealth building event. Claim your free access now at richdadfree.com. Don't wait, access is limited. Go to richdadfree.com. That's richdadfree.com.
All right, we're back. I do got to cover two things before we get to hear Andy's take on where the advantage and really where we can all win from this government debt ceiling event. One, we do need to stress that this is not financial advice. Andy, myself, we don't know you. We don't know your risk tolerance. We don't know how much money you have in the bank. We have no idea if I don't know, your dog's on life support and you need to make sure you can afford that. We do not know you. And so we can't even pretend to know what's best for you. So this is not financial advice. What you're hearing today is opinions from Andy and Greg. They most likely are. I'm going to agree with anything Andy says. He's smarter than me. So you're hearing opinions from Andy and Greg. What we think, we cannot tell you what to do. You can listen to this. We can give you ideas, thoughts, but you have to make your own decision. So I really want to make that clear. We do not want to pretend to know what's best for you. We don't know you. We want to. We're sure you're great.
Absolutely.
But we don't. Two, I am supposed to ask you to hit the subscribe button. I'm new to this hosting thing here, so forgive me. So hit subscribe. And one thing that I learned recently, this is going to sound dumb because I'm sure the whole world knows this, but I'm going to share it. When you're watching this on YouTube, there's a little bell type icon. If you click that, it'll tell you when the next Rich Dad show is coming. Lastly, we would love to hear your comments, hear your thoughts on this show, but we would love to hear any feedback you have. Don't be mean to Andy. Andy's the greatest person I know. So
you're hilarious. You're killing me.
I'm telling the truth. I love you, Andy. But before we turn into a love fest, you were talking about the advantages that maybe a Joe Schmo like myself can get from what's going on with the debt ceiling.
Well, first of all, what's important is probably less about whether they get this fixed sooner or later. They will fix it sooner or later. One or two scenarios will happen. The most likely one, I think, will be they'll come to a deal and both sides will claim victory.
Hero ball, right? Every Congress person gets to go back to their people and be like, exactly. I saved the day.
I
beat them up.
We came together at the end. Or they do what they did in 1995 and 6 and they have to furlough and, they blame each other even more. Oh, it's their fault. They couldn't, compromise or whatever. Right. But they'll get it worked out. They're not going to shut down the U.S. government indefinitely and it wouldn't be the end of the world. But here is what is important. It's a great opportunity to learn about where we are in our fiscal situation. The book Rich Dad, Poor Dad changed my life forever when I came across that simple drawing of a financial statement that Robert put in the book. Me, along with millions of people, had an epiphany when we clearly saw the difference between a person that had income from a job and a person that had income producing assets. And in my life, that just started a journey where I became a student of financial statements ever since. I'm still learning about them. And to learn this on the personal level is important. I have to manage my own. So my wife and I have a weekly meeting where we look at our 6 numbers on the financial statement: income, expense, cash flow, asset, liability, net worth. But it's also important to learn to do that for businesses I'm going to buy. If I'm going to buy their stock, for a real estate syndication I might put my money into. And at the sovereign level, even the United States has income, expenses, and cash flow. And assets, liabilities, and what they would call equity. And so this is a wonderful opportunity to see where we are, because more important about whether we'll get the new approval for new funding, and that's just legislation, right? That's, stroke of a pen, and okay, now the debt ceiling's higher. What's more dire and what could be disastrous, if I could respect Madam Secretary Yellen, is that we're spending so much money that the amounts that we've raised this debt ceiling, if you look at historically, and they used to raise it a couple of billion. Now they've raised it trillions and trillions. And it's so easy to just legislate your credit limit on your credit card higher. So easy to do. The task comes in dealing with that debt and where it looms. My feeling is that real estate especially is a very attractive asset class right now, because what I believe will happen is there is a link between the fiscal irresponsibility of just raising our debt ceiling and spending out more money and the monetary side. Those are linked together. The Fed buys these bonds and they print money to do them. The Fed has taken a break from some of this low interest rate, quantitative easing. They've had to because of what? It's what Robert has talked about for decades, is inflation. And I will tell you, in my humble opinion, Robert is correct that we will continue to print. We'll go back to printing pretty quick. You'll see the labor market start to struggle with these higher rates and more hawkish policy. You'll see recession types of signals start to come in the market. Long term, they will raise its debt ceiling time and again. Long term, they will print more money to pay for this debt. And the big question isn't, I'd say Secretary Yellen, it's not a matter of swiping the pen and signing to where we can borrow more. It's at what point does this spending become huge? Now, here's the opportunity for the average person, though.
Oh, good. Lay it on me.
Buy assets. It's always the same. Look.
Okay. All right. Okay. Wait. I'm not letting you off quite that easy.
Yeah.
Sorry. You before we went to break, you started to talk about the stock prices should take a dip with this confusion. Yeah. But then after the break, just coming back, you mentioned real estate. And can we just explore both of those? Because I didn't.
You bet.
Thank you.
I really love a great crash. I get so excited because, consumers get excited for Black Friday sale. They can't wait. They get in line. They wake up. They can't wait to get rid of their money to buy things, doodads, if we can use that word. Investors get excited for the same reason. We love a Black Swan event, just like a consumer likes a Black Friday event, right? We love a Black Swan event because asset prices drop for a while and give us bargains. So the benefit I see with the saber rattling goes on, and the closer we get to June 1st, where there might not be a deal, right? As the market gets spooked on that, there's deals to be had.
Can I talk to you? Just dig in just a little deeper there. There's an article in which is this? I don't even know. Sorry, but it was written by Stan Cho that I read, and he said that and this isn't special to him, but he said the Dow Jones average dropped 231 points or 0.7%, while NASDAQ lost 1.3%. So that's kind of what you're talking about. We're taking a dip in prices, so now might be the time to buy.
Yeah,
is that kind of where we're going?
Yeah, Warren Buffett, in his annual letter last couple of years, he said one of the unique things about the stock market is this technical component of chart reading is all emotions. People get scared, people get afraid. It's the same in real estate. Someone gets a divorce. They've got to split the assets up. There's a lot of emotion that's high. And maybe they say, look, let's just sell this house and get rid of it, and then we can be done with it. Well, that emotional decision drops the price of the house below what it's probably really worth in other circumstances where there was emotion involved. Guy gets a new job or needs to sell his house because he's into distress or about to be foreclosed on. Those emotional situations make people sell things. And that happens in the stock market. So Buffett says it this way. He calls it the shooting the fish in the barrel experience, where he says in negotiated transactions, it's very hard to get discounts with savvy investors. If I went to Warren Buffett and said, I want to buy your company Fruit of the Loom underwear, we'd get out the financials, look at his fundamentals, and he would get top dollar for that, or he wouldn't sell it. But in the stock market, where it's a public arena, I mean, you got people buying stock for no reason. Oh, it's my 401k. I got a check. I guess I'll buy stocks, right? And so when you have things of uncertainty, emotion injected into the market, such as debt ceiling crisis and things like this, the skittish people sell and they're scared. All of the capital gain people run because they're about buying low and selling high. So they run, and it drives things even lower. Where the cash flow investors, real estate and stocks, we see, my gosh, that cash flow box just got that little machine that cranks out the cash. The price tag on that thing just got cheaper. Right. Maybe I'll pick it up on the cheap.
Okay, so that's the opportunity for a person that, well, I want to frame this properly, Rich Dad way. I want to say it's the opportunity for the average Joe guy, but really it's the opportunity for the average Joe guy financially, but with education. You don't want to just jump in and say, hey, everything's on sale.
I think so. The average Joe guy, we could say educationally, almost none of them are there, but financially, an average Joe, I mean, my sons are teenagers and they buy stocks. Yeah, and they get excited when they see a price drop. They understand that concept. Real estate is fabulous right now because everyone thinks it's the high interest rates hurts real estate. I'm not a real estate expert. I'll leave that to Robert and Kenny and guys like that. But I will say this, even a guy like me is smart enough to know that the renters pay the payment, right? I mean, if it cash flows well, you have a nice margin of safety. It gets nothing but better when you refinance at lower and lower and lower and lower rates. I mean, it's just the amount of money you can pull out of that thing when the rates get lower, tax-free is incredible. So this opportunity, the thing that I would say should be concerning is not whether or not they raise the debt ceiling this time, but the amount recently, the trend, the amount by which we're raising it is growing at a rate that's disquieting. And really, the word that is used by the Congressional Budget Office, the words that used by the GAO, the Government Accountability Office, who is the nation's lead accountant, the Comptroller General, the word they use is unsustainable. In other words, we'll get the legislation to borrow more, but is the act of borrowing more really sustainable to keep doing it and doing it? A great opportunity for people. I'll tell you another reason why I say buy assets. When I first started studying with Robert, back before my wife got sick and my kids started playing college basketball, and I was, travel as a Rich Dad advisor back in those days. 14 years on the road with Robert, incredible. Every year we do at least something. And in those early years, Robert would talk a lot about the devaluation of the dollar. He talked a lot about it, and it really changed the way I thought. I'll always be grateful to what I learned in those years about monetary policy and fiscal policy. What's really interesting is in those years, he used to use the word helicopter money a lot.
Oh yeah, helicopter Ben.
Yeah, and I think, well, what is helicopter money? And helicopter money is simply throwing money out in the public. That's why buying assets is so important. I really enjoy being an owner of real estate. I don't know near what Robert does. I mean, I'm not even the same ballpark there.
Same.
But with the real estate that I do have, when they throw helicopter money out, well, they use it to pay rent, so it winds up in the investor's pocket, the asset holder. I love the crypto people because they have to buy my Apple phones and get on my AT&T network. They have to use my stuff to trade their crypto. When they throw out helicopter money, they're going to go buy food. So, the investments I have on Best Buy, the investments I have on food companies like Kraft Heinz, the investments I have in ExxonMobil, all that money filters back to the investor, because every dividend I get from Exxon and Kraft Heinz and Coca-Cola and, Dow Chemical and, dozens and dozens of businesses that we're shareholders in. I love the helicopter money because it always filters back to the people that own the assets. In fact, if you look at the fiscal breakdown, Greg, it's astounding. Look at Social Security, what they call, I think they call it now income assistance, new term since COVID, Medicare, healthcare, veterans benefits, right? All of these things are going to people who are not independent, but dependent on their government. I think last year, don't hold me these numbers, but I think last year we spent about 6.5 trillion in spending, 6.5 trillion. 4.5 of that, the vast majority of it was to people, just giving it to them to either buy healthcare or Social Security or some type of benefit where they were going to spend it back into the economy. Well, the people that own the assets are the ones that receive that money. It's not going to the poor, it's going to the rich. It goes to the poor and then they buy stuff and give it to the rich. So the answer is always the same. Maybe people get tired of hearing it, but if you play Monopoly, if you land on something, buy it. If you play the cash flow game and you draw a card, small deal or big deal, a little bit more judgment needed in the cash flow game. But if it cash flows, probably buying it. And so investors are always about buying things, always. And so when the debt ceiling, rigmarole or the saber rattling and the news headlines happen, I just simply look at the market and say, from a technical standpoint, as this trends down, is this emotional? And if it is, I say, gee, there might be some great fundamentals there that are the price is unjustifiably low. It's a bargain. Right. Time to snatch that up. Long term, I just have to stand with Robert and say, I think the dollar's toast. I think it's going to be toast. I think debt is a great asset right now. Even though it's in the liability column, it can put a lot of money in your pocket.
So we're going to wrap this show up. And first, I want to say thank you for being on. I always learn so much from you. Full disclosure, Andy occasionally coaches me one-on-one. So I'm already a big fan. So I don't want to act. I don't want to act like I didn't, I don't fake anybody out here. Andy, I think you're brilliant. So I'm just going to say it. You're my man crush, whatever.
Well, I'm going to come more often. I get nice treatment here.
There you go. Only when people can see though, behind the scenes, man. But I do want to just, in my simplistic high school education words, because I'm not smart like you, basically you're using both fundamental and technical. Right now, there's a technical opportunity because of the debt crisis. People are getting emotional. You tied those together, emotion and technical. But the opportunity isn't just buy a stock or an asset. The opportunity is to buy a stock asset with good fundamentals.
Yeah, there's rough fundamentals.
So you got to have both, that goes to how we started this show with Robert's quote about
there's fundamental reasons people are pulling out of some companies and some stocks because, well, let's not digress too much, but maybe one little tidbit for people.
Yeah.
A great example was Silicon Valley Bank. They had all these bonds that lost their value because they were old ones and they had to sell them at a discount, right? Really a fundamental macro problem. But what that did is technically the whole banking sector went way, way down. I'm like, okay, all the banks can't suck right now. Let's look at their book value. Let's look at their assets. I looked at more of the balance sheet than the income.
Yep.
And I said, based on a balance sheet, because it was the bonds that were really hurting them, right? The discounted bonds, rising interest rates. And so I picked up two banks. I bought stocks in two banks, and I couldn't be more thrilled so far anyway.
All right. We got to end this, right? So I have one favor from you, and you can certainly say no. Okay. Just saying the name of one of the banks that you bought stocks in that you're happy with.
Sure. I bought USB and Citigroup, bought both of them. All
right. Well, two. That's a twofer. There you go. Tell me, people, that wasn't worth your time on the show. I dare you to tell me. Andy Tanner.
Andy, I might add this. If you look at the price Buffett bought USB at, very rarely do I get a lower price than Warren Buffett, but in this case, you have the opportunity to do so. Now, he might leave the bank tomorrow. He's sold stuff that I've kept before.
Sure.
He sold Barrick Gold and I kept it. So I don't always agree with Warren because he's plays a bigger game than I do. So there you go. But don't go out and buy those, because if you don't know what you're doing, I actually have options on those. I know how to sell a cash secured put. If it dips, I get more cheaper. I mean, don't go out without education just because Andy said it. That's why you don't do that.
Seriously. Here's your financial tip. Go get some financial education first. And I would like to recommend get it from Andy Tanner, but we'll talk about that another time because you'll have your own show soon. Hey, one thing
it's going to be okay. Long term, dollars not. That's your summary.
Yeah, that's fair. And I forgot to thank Robert for letting us do the show. We're on his channel, and Robert, I should have done this at the beginning. Sorry, but thank you.
And
I personally had a blast. Andy, love you.
Wishing him safe travels until he can come back and we can hear from the real expert.
The real deal there.
All right.
Hey, thanks, man. I'll talk to you later.
Take care.
All right, you too.
This podcast is a presentation of Rich Dad Media Network.